So, what we intend to do is try to provide this 15% tax rate for as many companies as possible. And, but you have to reinvest the money, the profits, into the business, and then you get the 15% tax rate. Now, the rules are going to be somewhat complicated, and we haven't really announced that's going to be done by the tax writing committees. But I think it's safe to say that pass-throughs will be eligible for this lower corporate tax rate as long as the money is put back into the business. If you take it out of the business and give it to the shareholders or the owners, then it's taxed at the individual income tax rate. And under our plan, that will be either 33 or 25%. Well, look, right now, if you're a partnership, our highest income tax rate is 40. So you'll get a lower rate. It'll go from 40 to 33. So every rate is lower, but there's a big difference between a 33% rate and a 15% rate. And so what we're worried about is we don't want companies taking wage and salary income, and using that to pay a 15% rate. That should be taxed at the personal income tax rate. So we don't want people gaming the system. Oh, it's definitely a goal, and we hope to get it at 15%, no question about it. I'm just saying, look, realistically, it's going to go through the Ways and Means Committee, the Finance Committee. We're going to fight as hard as we can to get 15%. If it went a little higher, but we could get the rate down, we'd certainly be, amenable to negotiating that. But, we want the rate as close to 15% as we can get.
Okay. And if you can't get it that close, let's say 25%, that would still be progress, but is that enough to stop corporate inversions?
I think we got to go a lot lower than 25%.
So how would you tackle the problem with the Pfizers and Burger King, et cetera, all of the inversions that have been happening?
You got to cut the corporate rate. You really have to do that. You got to get it down so it's competitive with other countries, and we're just not right now. And 25%, I'm not sure it will help, but it won't stop the problem. A 15% rate would. Look, the European Commission doesn't want countries to cut their corporate tax rate. They hate the fact that Ireland has a 12.5% rate because it means that these other countries with 25% rates can't sustain that. And it's forcing other countries to cut their corporate rates. I think as Ireland and Apple both said, we didn't violate any laws. These were the rules. We played by the rules. Why should we have to pay this big tax penalty? The European Union doesn't want tax competition. They hate tax competition. So I think that's what's driving this. Well, look, Donald Trump has been very clear about what he wants to do. He wants to, first of all, the trade promotion bill with Asia, that will be renegotiated. It doesn't mean we're not going to have a trade promotion authority bill with Asia. It just means that we're going to start over, and we're going to negotiate in ways that take American interests more at stake. NAFTA, I don't know what's going to happen with that, frankly. I mean, I'm a supporter of NAFTA personally. Donald Trump says that we've got to change some of the rules. And we'll see what happens. But I do think that the global trading system is still going to remain open. We may have to, and the two countries I think that Donald Trump is most concerned about are China and Mexico. And it is true. I mean, Donald Trump is onto something. China does not play by the rules. They steal our technologies. By our estimates, they're stealing about $200 billion of our intellectual property and our patents and things like that. Well, the idea of having somebody who's a tough negotiator like Donald Trump sit across the table and say, you're not going to be able to get away with, stealing our things, or you're going to lose our markets if you don't start, compensating for us. That's a good thing because we can't afford to lose $200 billion a year to the Chinese. And with respect to Mexico, I think, it's a hotbed issue. My own feeling is that we need NAFTA in no small part because we want to keep Mexico economically healthy and vibrant because we don't want them to go the way of Cuba or Argentina. I'm one who's personally in favor of trade with Mexico. Hillary Clinton wants to use the stick of penalizing them if they don't. We're saying, bring it back. You're going to pay a low rate. We're going to raise some revenues. It's a win-win. The U.S. government raises money from Apple when they bring it back to the United States, money that we wouldn't otherwise get. Apple invests the money here in the United States. The shareholders, who are mostly Americans or in retirement plans, it's better for the values of the stock. So it really is something that I'm surprised we haven't done this a long time ago. I see no downsides to this, only a big plus side for our economy.
Has there been a political will to do this, to drive it through? It's been talked about.
We did something like this back in 2005. We had a repatriation. It was $5.25, and we brought a lot of money back. And now we got to do it again because that was 2005 was 11 or 12 years ago. So now you've got all this money that's still stored up again, and we'll even get more back if we have this repatriation. And then once you have the lower corporate rate, repatriation won't be an issue going forward because companies will have a financial incentive to keep the money here to begin with.